Welcome back to Your Average Investor. Today we're going to be talking about Alibaba and if it's time to buy or not. I know it's hard to ignore all of the meme stock mania happening right now with GameStop and AMC. If you're interested in that, check out our other videos. Right now, though, we're diving into Alibaba because they just dipped on earnings. They're down about almost 7% on their latest earnings report. Now, if you haven't already, please subscribe to the channel. It does a lot to help us out. Back to Alibaba, we're going to be talking about the fundamental analysis first, and then we'll get into the business and technical analysis first, and then fundamentals later. So zooming out, ultimate long-term chart here. Here's what we've got that's really interesting. Alibaba back at IPO was about $90 a share. So I'm gonna throw in a price line here at $90 a share just to keep track of that. And then you had cuts below and has a base here at about $57. So we're gonna throw a base there at the low, and then moves back and kind of just bounces between that for a little bit before having an incredible rally from $90 a share up to 180, kind of based for a couple years, and then a big old rally up to 320 before selling off, and at one point coming back down and trading as low as $59 a share again, almost matching their low back in 2015, and then moved back up, hit about 120, and since then has kind of sold off and just pittered around here. And now we're going to zoom in to see the most recent pittering that has been happening. And to do so, I'm actually going to take one of these lines. Well, we'll leave all these lines on for now. So this is what's interesting here, right? We've got this area that for the last couple of years seems to have acted as a support for Alibaba. This line right here, I actually am going to get rid of. We don't need that. That's the IPO line. But this is support right here, right? There's a brief period where it cut below, hit the area, this is literally the Alibaba almost the all-time low, and then moved back up, and it acts as support again. And then more recently, it cuts through support, the price cuts through this support, and starts basing a little bit lower. Now we've got this support zone here of about $70 a share, and importantly, the prior support has now turned into a little bit of a resistance. Every time, we've got 1, 2, 3, 4, 4 times, even this one possibly, but even lower here, but at least 4 times that it started approaching this sell off right after. And then recently, as a run up to earnings, it did come up, pop above, and just pittered around this support resistance zone before having a really big pop day before earnings, and then earnings happens and is right back down here. So what I don't like about this is this has been for the last several months a resistance zone, and this may be a false breakout. So I could see very likely Alibaba kind of just pitters off again over the next couple months and moves down into the 75, maybe 72 range again, maybe all the way back down to 70. If it comes down to 70, maybe I'd consider grabbing some for a swing trade. The other scenario I'd watch, though, is possibly we see a base start to build here at $80 a share. If a base starts building here at $80 a share, I could also see myself building a position with a very tight stop loss, maybe at like 77.5, or even 78.5. So that if it cuts down below that, I'm out and I'm going to get back in somewhere down here. But if it starts moving back up and this starts acting as a support again, maybe I catch a nice move back up to $100 a share. There's no other real good trend lines that you can look at. Like, you don't have any higher highs really, or lower lows, or anything like that, higher lows. You've got really nothing happening here other than a couple horizontal lines. So from a technical perspective, that's what I'd be looking at. I'd be watching if it does cut down here, build a position. If there's a base that starts forming here, maybe consider building a position with a very short stop loss. Or if we see it bounce up above again, like 90, 95, then maybe that would signal a new uptrend, and look for a dip to enter and catch the next wave up. Now, what about fundamentally? Why did Alibaba lose on earnings? This earnings report actually at face value looks very good. You can see the estimate was 92 cents per share, and the actual was a buck 40 per share. However, in spite of these excellent earnings, a number of the stocks that Alibaba invested in as a company, they invested in several public stocks, have decreased in value significantly since they invested in them, and because of that, they had an adverse reaction to the earnings report. Now, if you're not familiar with what Alibaba does, they're a marketplace for B2B marketplace for people to buy wholesale products directly from suppliers. So if I go to Alibaba.com, I search trampoline for kids, and I've sorted this by suppliers. I can now see a bunch of different people that I can source trampolines from, and then resell those trampolines for profit, hopefully, right? Slap my brand on there and resell them. Some of the risk here is that what I would call China risk. And the China risk is that because Alibaba is a Chinese-based company, the US and China like to play the bigger stick game with each other, where they both try to shake their stick and see whose stick is bigger. And the thing that the US loves to do, especially the US Senate, is say, we're going to delist all Chinese stocks off of our stock exchanges. You can't buy Chinese stocks because they're just cheating us, and yada, yada, yada. And when that happens, there's almost inevitably big old pullbacks in Chinese stocks like Baba and others, because delisting doesn't mean you no longer own the shares. It just means you have very difficult liquidity. You go to an OTC stock or some other place to try to sell your stock where you're going to incur a lot of fees for buying and selling. And because the liquidity is not there, you might have a very wide bid-ask spread and lose a lot of money trying to sell. So because of that, people generally, when they're afraid that their stock might get delisted, they'll sell their stock because they don't want to get stuck in a position that they can't exit with easy liquidity. Now, the other part of the China risk is, of course, that for the majority of its time, Alibaba has been focused on helping people find Chinese suppliers. And while that's been true in my experiences, I've sourced a number of items off of Alibaba over the years. They are looking at expanding outside of China, which is interesting because a lot of companies, Apple, for example, is working to decouple from China. And I think they've moved a lot of their manufacturing now to India, and other companies are following suit. So the question is, if Apple and others are moving away from China to India, do other companies who, Apple's not obviously sourcing their iPhones on Alibaba.com, but do other companies start finding countries other than China to source from? And if so, do they recognize that even though Alibaba is primarily Chinese manufacturers, there are other countries on here, right? I could filter to India, Malaysia, Pakistan, Philippines, Singapore, even UK and United States. Let me filter this down to the United States and check this out. We've got Ocean Power LLC. This actually is interesting. The Atlas Network, maybe. This looks like a Chinese company that tried to list themselves as a U.S. company, which wouldn't surprise me. The Chinese manufacturers are very crafty in how they try to get around rules and loopholes and things, and in some cases even with quality and safety controls. And that's actually one of the reasons I personally stopped sourcing out of China, is I wanted to stay away from that and have better control over my quality of products. Now, that aside, right, there's other places to source, and two of the big ones now are India and Mexico. So let's just filter this down to India, see what we have from India. Iris International, Garage Sports International, K&T Creations, right? You got a number of different ones, but you notice here, no reviews and ratings, no reviews and ratings, no reviews and ratings. Let's unfilter this. So it shows the China ones again. Now we're getting some reviews and ratings. Here we go, 158 reviews, 4.9 stars. One review, 17 reviews, 4.5 stars. So it's pretty clear when people are coming to Alibaba, they're expecting to buy from a Chinese manufacturer. And so if for some reason there becomes more risk there, China risk, where the US and China get in a tiffy over Taiwan or something like that, and maybe imports from China are getting taxed a lot harder, there's more tariffs placed, things like that, that could drive up costs for businesses who now say, you know what, maybe it's more worth it for us to source from India or Mexico, or even just source within the United States, so we don't have to worry about all that China risk, kind of what Apple's doing right now, decoupling from China. That's about it for the analysis that I've got on Alibaba for you. Personally, I would not buy here. I'm not planning on buying. I'm not currently a shareholder. I don't own any options, long or short. And I don't necessarily think it's a good time to short Alibaba either. It seems like there could be a case where it just sits here in bases for a little bit, forms this as a support again before moving up, or could move back down into this mid to low 70 range before moving back up again into the upper 70s or lower 80s. And so I'd look for one of those two scenarios before entering a trade, and then maybe I'd consider a swing trade. There are other setups I like better right now, though. So that's all I've got for today. Again, if you haven't already, please subscribe. Thanks for watching. We'll catch you next time.